Hello, and welcome to the Free World Investing. Today we're going to be going over the MACD indicator and how to trade with it. The MACD indicator stands for the moving average convergence to divergence, and what it does is it plots two moving averages. Right now I have mine set to 12, 26, 9. It's the most commonly used one, and it's very practical to use, very intuitive. There's a lot of information when looking at the MACD. And what's good to know is that the MACD, the blue line, is known as the MACD line. And this orange line is the signal line. Now there's a couple different ways to trade with the MACD. The first one is to use the MACD just like you would with the RSI and other indicators that gauge momentum, and to use it to find overbought and oversold areas. Now, an overbought and oversold areas are normally, once it hits around 20, it's a good point to realize that it's become overbought and oversold quite often. Now, sometimes it will continue along with it as well, with the trend, as you can see over here. It continued for quite a while. So, like with most other indicators, you want to use more than one at a time. Another way to trade with the MACD indicator, besides using it as an overbought and oversold area, is waiting for the convergence of the two areas, and that is when the MACD and the signal line cross. And this gives you a chance to jump into a trend fairly early on. Now, sometimes you may miss big movements, such as right here, because oftentimes when the MACD and signal line cross, it's due to a big rapid move. Now, I have mine set to close. Some people like to trade on opens. I like to trade on close for the most times. But you can see that if we go right here, this is a good amount of profit from right here. From right here, even if we got if we opened up right where it crossed, which would be right here, we would have got a good we would have got a good 60 pips, and that would have been even if including right here. If you're going from one cross to the next cross, that would have been a good 60 pips right here for, a couple days. Well, a couple weeks, about a week. So in about a week, it'd be a 60 pip movement for the week. And you could have got even more if you would have set up down here with the support line. Like I said before, you want to use a variety of different indicators to decide when to enter and exit your trade. The MACD is very good at deciding certain signals of which to trade at. And like I said, 20 is a good spot for oversold and overbought on bought levels. So it's a pretty good one to use. Like we can see right here, this one that had a big drop. Not very often you have such big moves, but you can see it right there. But remember that when you do have moves like that, there's often an opposite reaction. So right here, we have like an equal amount of momentum for this upswing trend before it starts to go a little bit more sideways right here. But right here, just trading with that, you would have got the 60 pips, at least right there. Maybe a little bit more. Yeah, let's see. Now we would have got about 1420 all the way to 1270. So that's over 130 pips. And then you could have got this upswing and got even more. If you're trading in stocks, this is over 100% gain. Trading forex is a little bit different, but the same general rules apply. It's very often good to know percentage values if you are trading stocks with the MACD, but you don't have to use percentage levels. You just have to really know the amount of risk that you're taking on for each trade, and know when to cut your losses, when to ride your wins, and at certain moments when to double down on your position size if it's starting to move the wrong way and you're trying to get your money back from certain losses. But the MACD does really help with getting good trades in, but sometimes you do miss some, like right here. You can see this cross right here, and with this cross, unless you were on a different time frame, if you're on a lower time frame, you might have caught this move. But on this time frame, you kind of get the cross a little bit late, and you would have missed this trade. Now, when the signal line is over the MACD line, this is a good time to realize that you are going to most often be in a downtrend, and when the MACD line is over the signal line is a good time to know that you are probably going to be in an uptrend. And like I said, once it reaches a certain level, you could see that it's going to reverse. And also, sometimes the overbought and oversold levels will depend upon the time frame you're using. Like I said, a 20 is a good one for a lot of time frames. Right here, we're on a 4-hour time frame, and it works pretty well on most of these. Like I said, you would have missed right here, but when you got down to 40, you could have opened up your position size a little bit more and made up for any losses with that huge swing movement that came and corrected that move. And that's going to be all for today. We'll probably go over the MACD again, and in the next video, we're going to be going over how to set alarms for the MACD indicators so you could get them sent straight to your cell phone or email when there is a cross or it becomes overbought and oversold on the MACD. If you like this video, please give it a like and subscribe to the channel. You'll have a terrific day. Bye.